Welcome back, traders and investors. This is the Benzinga Pre-Market Prep. My name is Garrett Cook. I'm here with Ann Logue. She's a consulting analyst and author of Day Trading for Dummies. Ann, good morning. Welcome to the show.
Good morning. Thank you for having me on again.
So, how are you doing? I kind of want to get into a little Russian talk, if you wouldn't mind. You got any color on what's been going on overseas? I mean, it's been a
Russia's
little wild
so
out here.
fascinating. I mean, it is. It's just, what was the line about it being a riddle wrapped in an enigma, wrapped in a mystery, or something along those lines that they used to say in the Cold War? Um, you know, we make this assumption when we talk about free markets and efficient markets. The main thing we start with is the assumption that people are rational. And I'm not sure I'd say Vladimir Putin is rational. So right off the bat, we're dealing with a market that has some really big inefficiencies in it, just because of that. The other really interesting aspect of that is that the oil market isn't a completely free market either, in particular because of the role of the OPEC cartel. And Russia's economy is very heavily dependent on oil and natural gas. And we're seeing prices for gas that are quite low right now. And, it's a very interesting thing. I mean, the OPEC nations have basically outsourced all of their defense spending to the United States, right? They rely very heavily on us to maintain peaceful conditions or semi-peaceful conditions or some kind of stability in the Middle East, right? Saudi Arabia does not have its own army of any size. And because of that, there's this very complicated relationship between the U.S. and OPEC. But that may be, there may be a lot of people's interests that are being furthered by having oil prices kept low, which is very painful for Russia. But I think anybody who's going to jump in and be trading energy futures, you have to know that there are a lot of inefficiencies in that market, in part because of the political control of certain big energy markets in the Middle East. And in Russia, of course, they're state-owned companies or semi-state-owned companies. And in China, the energy companies are state-owned or semi-state-owned. And the Russians do not have the same kind of diversified economies that other energy producers do, that the U.S. has. I mean, the U.S. is an energy producer, right? We're still dependent on the Saudis and the Middle East, but we're producing energy. China produces energy. It's a very diversified economy. Russia isn't. After the Cold War, they concentrated heavily on improving their energy production, which is good because the country's very wealthy in natural resources, but they never really built up the rest of it. And, it's one of these interesting ironies that a lot of Russians who have expertise, say, in technology are working in the Silicon Valley. Sergey Brin, right off the top, right? Mm-hmm. So you have this, it would seem as though there are people trying to force the price of energy down, which is very good for us in the U.S. And I think you're seeing the ruble falling apart. And what happens then is, because of the crony relationships between the energy companies and the government, is how this starts to translate into political upheaval and whether or not Vladimir Putin is strong enough to maintain control. Russia they have nuclear bombs. They have a lot of firepower, and it's going to be really interesting, I think. But I think for currency markets, this is obviously good for everybody that's not the ruble, and I think we're seeing that. I think this is probably a particularly good play for the euro, given that so much Russian energy goes into European markets. That the Europeans are far more dependent upon that than, say, the U.S. is. We're not getting much export. We're not importing much oil or gas from Russia, but in Europe they are. So I think that's very good for the euro as a currency. I think this is a good sign for the European economy for the first time in a long time. unless Russia falls into chaos, and then that becomes bad for Europe because they're sharing basically this border. Um, and I think this is also good for China because China has energy production, and China has been very aggressive in developing resources in Africa. That's a little bit controversial because China has not necessarily cared a lot about different environmental or human rights niceties, but they're active there and they've been developing a lot of resources there. And given that Ebola in West Africa is sort of under control. I mean, it has stayed out of Nigeria. I think that's been a very big concern. As long as Nigeria stays Ebola free, that's probably good for the Chinese energy market. So Russia's vulnerable very long term because of other sources of energy, but near term, it's going to be really interesting to see what happens as Putin realizes that he doesn't have the economic strength he was hoping to have, and how that plays out. Does that play out in the form of internal turmoil, or does that play out in more expansionistic activity? I would not want to be living in Ukraine right now.
So, I mean, you got over into emerging markets, but before we actually get off Russia and get into there, I wanted to see if you had any views on the back and forth that's taking place in Russia right now, because you have their you have them raising their lending rate, which I believe went from 9.5 to 10.5, and then they just took it up to 17. So that's their weekly lending rate, correct? And then what do you think about the decision?
You look at our rates; they're so low, it's comical.
And what
There's
about
a lot of risk there?
And now they're doing that in order to, attract investors over into the area for the return. But how about the fact that their finance minister was trying to support the ruble yesterday, and it just seems like they're just giving up. So I mean, they're raising rates, but they don't want to support the currency.
Right.
So
they're raising rates. They don't want to support the currency. The country has defaulted before. In the summer of 1998, Russia defaulted under Boris Yeltsin. So there is some history there. Yeltsin defaulted actually on Soviet debt. He argued that the new country wasn't responsible for the old government's obligations, but I think that's one of the reasons those rates are so high. I mean, we forget in the United States that one of the reasons our rates are so low is that for all the problems we have here, this is still one of the safest places in the world to invest. And people who are looking for a safe place for their money will happily take 1% interest. Russia is not safe. That's why they have to have that 17%. Russia has default risk because the country has done it before. They have nuclear bombs. Yeah, they can print money, and so can we. But if they're letting the ruble fall, they're not willing to support it. And I don't know. I mean, I think it's really interesting to watch. I think it's also a little scary. But I think from an investor standpoint, if you're looking for some high-risk return or for high-risk opportunities, Russian debt has that. But then the trade-off is when you get your money, will it be worth anything?
And I've heard some people suggest that the best course of action might actually be to let the ruble depreciate and focus on other efforts in the economy, like expanding domestic social spending programs. What do you think about that?
The question is whether or not they have the will to do that in Russia.
Okay.
I mean, to some extent, that was what they did in the EU, was they allowed the euro to fall. Not a lot, but they did allow it to fall as a way to help stabilize some of the other economies, or some of the non-German economies, I guess, the non-German, non-French economies. The question is whether or not Putin would do that. That would probably be a good thing. There are, a lot of people outside the cities in Russia are fairly poor. And the people in the cities, of course, are very tied to this go-go energy economy. But I think it gets back to this whole point, which is I'm not sure we're dealing with somebody who is entirely rational. And usually when we're dealing with national leaders, we are talking about people who are very pragmatic. You're talking whether or not you agree with them, whether or not you agree with their politics. For the most part, they're people who are trying to balance the short-term interests of the nation with the long-term interests of the nation. They're trying to balance the interests of their country with global matters. And I'm not sure that Vladimir Putin is quite as pragmatic as maybe we're used to thinking. I think that makes a lot of sense to do that, but then that would mean curtailing some of the military ambitions. And at the same time, you still have this economy that's so dependent on energy, but the energy market is somewhat controlled, and it's somewhat controlled by OPEC, which is very closely tied to the United States, which has an interest in seeing a weak Russia. That's my conspiracy theory for the day.
We like conspiracy theories. Now, I heard I think I was listening to NPR this morning that says Vladimir Putin hasn't even said anything since this rate hike and stuff. And the one thing that I heard he did say was that all has to do with the Russian central bank, and that's out of his power. Do you believe that?
No.
Right.
No, I don't believe. I believe that if he says it's out of his power, then that's probably some kind of a signal that there's going to be some changes there, or that he doesn't want to be responsible for that. But I think that given the way, you went from a government that, under the Soviet system, it was a very tightly controlled central government that was responsible for central planning. And most of the leaders now, both in the private and the public sector there, came up in that system. That is what they tend to know. That's kind of what they default to. And so I think there's a lot of very close relationships between the private sector and the different branches of the government. So the energy sector, the banking sector, the government are pretty closely tied, not necessarily in a direct fashion, but that gets into a lot of the interlocking ownership interests and interlocking management interests. I would say Putin's looking for some deniability, but I think if he truly has no control over the central bank, that is a really damning statement on the amount of power he has, or on the likelihood of him staying in office.
Okay, and so we can get off of Russia. I want to ask you one more question just about Russia, and then we can get into another topic.
Russia's fun, isn't it?
It's interesting, and what really I think what a lot of people are forgetting is that Russia really wanted to try to get away from the SWIFT system, which is used for international financial telecommunications. This is about about $6 trillion worth of transactions happen on this, and it looked like Russia kind of wanted to get away from it, and the U.S. was trying to influence SWIFT in order to take action to limit Russian transactions. Do you see the situation right now in Russia? I don't like to think of anybody as I like to think of everybody as crazy intelligent. So I'm going to assume Putin knows what he's doing. So do you think that this kind of plays into that at all? Is that even possible, or am I just speculating beyond belief and maybe he actually is just crazy and letting the ruble collapse?
I mean, there's clearly a lot of the international payment system is not very efficient. Unless you are trying to create paper trails to find money launderers and tax cheats and things like that. And I mean, there are a lot of people who are trying to find alternatives. Bitcoin is an attempt to find an alternative to a lot of these international payment systems. But the fact of the matter is, as long as there are national interests in having paper trails and having documentation, no matter what system you use, it's going to have some slowness to it. Given the allegations about corruption in Russia and tax avoidance and things like that, it would certainly make sense that they would want to get off of SWIFT. It would also make sense that they would want to get off of SWIFT just because it's not the most efficient system. But again, there's some of that inefficiency is built into it. So I don't know. That's a pretty interesting angle. I don't know what my thought is on that.
Well, we've only got you for a few minutes left, so let's switch gears and talk retail. We had a good retail sales number that came out. I've heard a lot of
Mhm.
people suggesting that since gas prices are so low, the consumer is taking that money and putting it into retail. So what are your
Yeah.
thoughts on that?
Well, I think the gas prices again. What's not good for Russia, but it's very good for us right now. It is helpful. We have had much better weather, certainly in the upper Midwest this winter than we had last winter. So that makes people a little more interested in shopping. And of course, the U.S. economy is improving a little bit. Not as much as maybe we'd like to see, but it's certainly improving. So that's good, and I think there is some pent-up demand out there. This is, although I have to say, I've been saying this for about the last 3 years, this is truly a make or break season for Sears. It's being kept up mostly by the ego and funds of Eddie Lampert. If Eddie Lampert weren't sitting on a few $1 billion, the company would have been gone long ago. American Apparel is one I've been watching for a long time. It's a penny stock right now. There's a lot of volatility there. They have finally, it seems, gotten rid of their controversial CEO,
That's exactly what I
Todd
wanted to
Carney.
ask you about.
Yes.
Yeah.
It's a strong brand. They have something that appeals to people. Interesting, basic, colorful clothing made in the U.S. If they can resurrect that brand under better management, that should not be a penny stock. The question is whether or not they can resurrect the brand in a very competitive market. So that's what I'm particularly interested in. I think another one a lot of people have been looking at is Abercrombie. Their controversial CEO is gone.
He's gone too.
He's finally retired. And whether that means some changes in the direction of the brand, that could be really good. But you are dealing at the same time in a market where teenagers right now aren't very interested in clothing. So how do you take a primarily teenage brand and make it relevant in a world where teenagers are perfectly happy to wear, leggings from American Apparel with thrift shop shirts? So it'll be interesting to see how that one plays out. I think this is probably good for retail, and I think there are certainly some for traders looking for low-price stocks with a lot of activity. I would pay attention to American Apparel in particular. I would pay some attention to Abercrombie. It has a slightly stronger brand than American Eagle, but American Eagle would be another one to pay attention to as well.
We've had
So,
Ann Logue on the line. She is a consulting analyst, the author of Day Trading for Dummies, as well as the author of Emerging Markets for Dummies. Some great analysis on Russia and retail stocks at the end of the year. Ann, thank you so much for joining us on the show this morning. We really appreciate it.
oh, you're welcome.
Thank
Thank
you,
you
Ann.
so much for having me. I always have a good time talking to you all.
Always enjoy having you.